Greetings. Today is Wednesday, July 23rd, and here is how I made $128 in 3 minutes. Today's trade is complicated, so bear with me. Let's stick to it. So what do? I trade options using leaps. Here are my beautiful positions. Here are my leaps. Here is my daily options that I make premiums off. This is the call leap. It's a further out leap, and it's covering that daily leap. This is the put leap right there, and it's covering the daily put right there. In the past many days, I've been moving the put because it's close to out the money, whereas my call, it's stuck until July 25th. It's a little bit in hiatus, but it's making money with time value. So these are my positions. So what happened is that because the market has gradually gone up since I've started trading this account, the call leap has value like a stock. It's worth much more. So I'm going to take advantage of that value and one thing, rebalance, remove the call covering upward more. I have to shift the strike up more. It was 414. I'm going to move it to 480. So it covers higher up the option chain. If you take a look right there, it's going to give me 5,500. Remember that number. I'm going to be credited 5,500. I'm essentially extracting that amount from the appreciated leap. So I'm going to do a couple things. First off, I'm going to will show you that this part, the 5,000, is embedded into the available dollars to make sure that it is there. So what do I have to do next? I'm going to have to do the same thing and rebalance the put leap, also moving it up. The put leap is at 564, and I'm going to have to move it up also so that it can continuously cover the daily put. Okay, and cannot do it be rolled. I have to do it manually. I'm going to select it, hit the close. It's going to sell to close, but I'm going to add an option leg. So it takes me back to the option chain. Luckily with Thinkswim, the smart interface, it takes me to that same expiration date, and I just essentially roll to a further out strike, covering more because again, the calls moved up. I took out money, and I can use some of that money to move the put up as well because the market QQQ overall has gone up and I need to rebalance my leaps. The leaps are the long dated options. Okay, I'm going to have to just put on the right contract amount so it matches. And there we go. It's going to cost $877. But remember, I made $5,500 from moving that call. And I'm okay using this money to rebalance the put, knowing that it's going to help me with my dailies. Going to execute the order. It was filled and it immediately rolled to the next, the 580 put now. Okay, so with that in mind, what next I have to do is I still have additional money. Remember, I had about 5,500, cost about $877 to rebalance the put leap, which yields me about, you'll see here, 4,500. So I have 4,500 to play with. I can utilize it. I could go buy a used car. I can go do whatever, take a nice vacation. But no, I'm going to have an additional position out there. Okay, so, but it would not be a leap base. It's going to be what's called a credit spread, or sometimes called a vertical spread. So I'm going to go hit the search button, go to the daily, do tomorrow QQQ. All right, I'm going to do a safe out the money call like normally. Do safe out the money. It's at 560. I'm going to go 563, maybe 564. It's offering around 60 cents, 30 cents. The further away, it's lower the premium, lower risk, but I still want to make some money. So here's the first leg. Okay. If I have the first leg, it should be covering just one contract there, but that's the first part. Now I have to cover. I have 4,500. That means I have about 40 points to cover that one option I'm selling. So I'm at 562. 562 plus 40 points because I have around 4,500 to play with. I'll be conservative and spend less. 562 plus 40, it's about 600. I can cover this spread. Okay, and because it's so nice, so it's such a daily, it costs really cheap. It costs 1 cent. Okay, so this is the spread I have. The daily backup. I'm going to give it a name, the daily backup. I'm going to fix the contract size so that it's correct. It's not 10 contracts, it's just one. Making sure the strike is correct. And the other side is, okay, so now there we go. This is the credit spread, sometimes the vertical spread, yielding me $63 today. Now, every day I have to move the option that I bought with the option that I'm selling. Okay, there's no more leaps involved. This is a daily backup. I'm collateralizing with I bought an option and I'm selling against that option. Okay, no more leaps. Okay, so that was filled, $63. Okay, now back to the original thing that I do every day, moving the daily put, the one that's kind of hovering in the money, that one that you've been seeing every day. And there it goes. It's yielding a healthy 70-ish cents. The daily, I'm going to push it out, roll it to tomorrow, and eventually it gets filled. So made about over $120, $130 today. I repositioned my call leaps that had value, repositioned the put leap, it had money to do an added position by using a credit or a vertical spread. They are both due that day. It's not a leap base. It's just I bought an option to sell against an option. Okay, that was a mouthful. This was a little bit complicated, but I wanted to show you the flexibility that options have. There you can play around using values of the leaps, using moving strike prices, moving expiration dates to your advantage. Here is how I build my wealth machine, trading options. Options are insurance for stocks. Have a good day.